how to build a successful trading strategy. A really essential topic in trading because without a good working strategy, your profits won't come. That's why we go in this video step by step through the process of building a successful trading strategy. So stay tuned because by the end of this video, you will know exactly what to do, which steps to go through, what to pay attention to in order to become successful with your trading strategy. So let's start right away. We will start on the higher time frame. For example, the daily one, because our first step is to find the underlying trend of the market. If I scroll out a little bit, then you see we are clearly making accumulation, distribution, accumulation, distribution, accumulation. So we're making new higher highs and higher lows. This market is definitely in an upwards trend. We are looking within the underlying trend for a trade entry into the trending direction. For that, we will move the time frame later on. But first, let's proceed on this one. Because now that we know that we want to go into the trade direction long, step 2 is following now. We are looking for the major support and resistance areas that could determine our trade area where we want to place our trade. So this is the area where we want to look for a trade entry. So let's check out. I will zoom out a little bit. And here we see the market has reacted to this level quite a lot. So there was a resistance in the market. That's definitely a level that we shouldn't forget about. To this level, the market has gotten already. So we see here the market has touched it, made it not through the first time, then second time tried and then broke through at this point. Since there are not any major support and resistance areas to look for before we get up here, that's it for now on this time frame. So let's jump a time frame lower and look for an entry there. So we see the market has made an upwards movement right here, but then spent quite a lot of time within this area where it has reached the major resistance. But as we saw before, at this point, the market broke through that area and made a new higher high. But we won't trade the breakout right away because it could be a false breakout as well. So we wait for confirmation. So we wait that the market makes a new higher low. And if the market breaks through and then makes a new higher high, that's the time where we want to enter the trade. So I will mark this area. Let's make it a red line so we know exactly that area where we look for that entry. Right here is the point where the market reaches our entry area. So this is where we put our entry long right here, putting our stop loss below the last low. Of course, this could be an area to place the stop loss as well, but I want to place it below this major support and resistance area just to make sure that we don't get knocked out of the trade too early in case of a spike down or something like that. So the next step is to place a target or to define your exit strategy. So of course, it could be that you move your stop loss. Once the market is making a new high, you move your stop loss below the last low. This is, for example, a possible strategy, or you use an indicator. But what is definitely important is that you know how to save your profits. So let's say the market has come right up here, made its way further up, your really beautiful trade, and you think, yes, big profits. But then something occurs, the bulls lose power and the market crashes down really fast. And you have not saved your profits, the market crashes down into your stop loss and you lose all your profits. Not only that, maybe also you have made a minus trade if you haven't moved your stop loss at the break-even point. So guys, please make sure that you have an exact plan how to save your profits on time. All that is important is that you have exact rules, that you have a, of course, well-tested strategy, that you know that the strategy is profitable and of course repeatable. And that is the reason why you need exact rules in order to enter the market, to exit the market, and to manage the trade. Without these exact rules, no matter what happens, it's neither repeatable and neither profitable because you will always change change your rules, you will always change your exits, and this on the long term will definitely not go well. So please don't do that. There's no professional trader, no successful trader that trades without exact trading rules. So there are really things not every trader has to experience it himself or herself, and this is of course crashing your whole trading account and losing lots of money. Just believe me, I have seen traders do that, so please don't do this as well. This is how the trade worked out, and we see our target would have definitely worked well. The fourth one, it's hard to tell, maybe here due to slippage might be working, might be not, just depending on the broker. And then the market dropped down again. And with the trailing stop, we see here accumulation, distribution, accumulation. The end of the trade would have been probably around the same area because this is below the last low with a little room. So overall, definitely a good trade. So always remember, use a target or a different exit scenario that saves your profits on time, the best part of the whole strategy, because that part cashes in your profits. That's it for today. You're fully prepared to build your own successful trading strategy. Don't forget those 6 important steps in order to build it. And if you like this video, don't forget to give it a thumb up. And if you haven't done so already, subscribe to my channel for more interesting videos to come. See you again next week with the next video. Bye bye.